Happy Wednesday, everybody. Ryan here with Mid-America Mortgage from the Grubbs team with your midweek market update report. So far this week, mortgage-backed securities, which dictate our interest rates, have been pretty flat. Not a lot of stuff going on this week to really cause much movement. So let's take it to the house here with some recent economic numbers that we've got coming out. So mortgage applications, purchase applications are up 3%, big increase there. Refinance applications are down big time, 5%. Of course, rising rates have been causing the refinance applications to slow down. Median home prices have increased, meaning that the cost to buy a new home is going up. So that's also having a little bit of an impact to our market. Another big reading though, oil prices are hitting the lowest level they have all year long. So if you've been driving by the gas pumps lately and noticed that $1.99 a gallon on unleaded, that's why. Oil prices are at a one-year low, currently speaking. So looking at this, we got new housing and building permit numbers out, both beating expectations, but the real reading in this was that there was a 10.3% jump in multifamily and a 1.8% in single family. So that's not good. That means that single family homes have declined while multifamily is increasing. So that's not really good for our single family residences, showing that we're getting the inventory and increase in those areas. Again, showing what's going on with our current market. Again, everybody, the December rate hike is still planned. Everybody's still expecting it, but yet the market has not taken that December rate hike into consideration, so it's not been fully priced in. So that's something we're going to have to still keep an eye out and watch once we get closer to that Fed meeting and them announcing that December rate hike and how it's going to impact our market. So just wanted to kind of wrap up with where we've been so far for the year. So for most of the year, it was cast in stone from the Federal Reserve to every investor, large and small. The belief has been that the U.S. economy was on a path of increased growth and that the Fed would certainly increase interest rates by at least 5 more times. Here we are, interest rates have increased. The stock market exploded, and the Fed continually referring to 3.7% unemployment that would blow up our inflation. Well, it looks like finally that the markets are getting it. No inflation. No major increases in wages. Consumers have pulled back, and the China-U.S. trade issues are not improving. Not only in the U.S., global economies are also sliding. 2 weeks ago, September consumer credit, revolving credit, actually declined. And both yesterday and today, retailers are all warning that holiday shopping isn't likely to be as strong as markets were initially anticipating. So this goes back to what we were talking about last week in our weekly update in regards to, I think those are some numbers that we're going to want to watch coming out through the remaining year in regards to consumer spending and how strong our economy really is as what everybody had initially anticipated. I don't think we're going to see that our economy is as strong right now as what it was earlier in the year. So I think this is going to be something to kind of watch closely as we go into that December rate hike and how much that's going to impact the Fed's decision in regards to going ahead and making that rate hike as planned. So this is it for this week's market update report, everybody. Again, Ryan Grubbs with the Grubbs team here. Happy Thanksgiving, everybody. Make sure to go on, like our Facebook and YouTube channels, and we'll see you back here next week. Have a great day.